Did Ripple miss their chance to dominate the stablecoin game? Back in December 2024, Ripple introduced RLUSD, their shiny new stablecoin. They're the fresh face in the stablecoin world, no doubt about it. But let's rewind. There were whispers about Ripple eyeing Circle for a potential acquisition, and that could have been a game changer. I've explained in several videos why this would be a huge win for XRP holders. Here's the quick version. If Ripple had snagged Circle, we'd likely see USDC, Circle's stablecoin, launch on the XRP ledger. Even with RLUSD already in play, USDC on the XRP ledger feels like a no-brainer. It would boost total value locked, drive more activity, and shine a spotlight on the XRP ledger. Over time, this kind of influence could open the floodgates for major capital to flow in. Imagine that level of dominance. My God, the possibilities are endless. The XRP ecosystem continues to evolve, paving the way for even more money to flow into XRP itself. If the XRP ledger proves useful and XRP is the key that powers it all, it's easy to see how this could become a game changer for XRP holders. The potential here is massive. But not everything is smooth sailing. There's been some less than stellar news recently. For starters, Brad Garlinghouse clarified, paraphrasing here, that he never made a specific offer, despite speculation. I'll break that down for you in case you missed it. Oh, and let's not forget, Circle just went public the other day, which might make you wonder, wait a second, does this change everything? Circle went public. Big news, right? And no, they weren't scooped up by Ripple or Coinbase, despite rumors of competing bids. So that's it, case closed? Not so fast. Check out this headline from Crypto Basic. Why Circle's strong IPO doesn't rule out a Ripple deal. Intriguing, isn't it? And they're absolutely right. Just because Circle has gone public doesn't mean a Ripple partnership is off the table. So you're saying there's still a chance? Yep, there's a chance, a slim one, maybe, but a chance nonetheless. Now, before we dive any deeper, let me just say, I'm not a financial expert, just someone connecting the dots. This isn't financial advice, so don't go buying or selling anything based on what I say. I'm just a crypto enthusiast who loves chatting about this stuff on YouTube for fun, not profit. Speaking of fun facts, did you know sometimes big publicly traded companies get bought out and go private? It's not super common, but it happens. Take Staples, for example. You know, the office supply giant. They used to dominate, and maybe they still do. Not totally sure. Anyway, back in 2017, if memory serves, they got taken private. They were facing their own challenges at the time. Interestingly, their business-to-business operations were thriving, but the retail side was struggling. Since everything was under one umbrella, it made Staples as a whole seem less attractive to investors. To address this, they split the two sides of the business. Without diving too deep, this kind of thing is pretty common. Publicly traded companies can be taken private. It happens more often than you'd think. For Ripple, as a private company right now, that's certainly a possibility. But here's the kicker. I believe Ripple's future holds something even bigger. At some point, I'm confident they'll go public. It's only a matter of time. If Ripple wants to make this happen, they've got to act fast. Time is not on their side. There's only a small window where something like this could work. And considering how massive the stablecoin market is set to become, the potential value to Ripple is far greater than most people realize. That's exactly what I want to dive into here. So when these rumors started swirling with those jaw-dropping numbers, my first thought was, yeah, this tracks. Remember that. Let's rewind for a moment and set the stage. Here's where it all began. I'll keep it quick, but stay with me. The news first broke on April 30th this year. Big moves in the crypto world. Ripple reportedly made a $4.00 to $5 billion bid to acquire Circle, but it was rejected. That's when the news broke. Reputable sources confirmed to Bloomberg that Ripple had placed a bid in that range. But wait, it gets juicier. On May 20th, another bombshell dropped. Ripple allegedly upped the stakes, proposing $11 billion in cash and XRP to outbid Coinbase for Circle. Yes, Coinbase was in the race too, making big plays to snag Circle. Then came the wild rumors of Ripple throwing around a massive $10.00 to $20 billion bid. But on June 4th, Ripple's CEO shut it all down, stating they never made such an offer. Drama, rumors, and billion-dollar bids. Just another day in crypto. Was Ripple really in the running to acquire Circle? Or is it all just a wild rumor? Let's break it down. Chris Brummer, a Georgetown law professor, interviewed Ripple CEO Brad Garlinghouse at XRP Las Vegas and later shared some interesting insights. According to Brummer, Garlinghouse was crystal clear. Ripple did not pursue an acquisition of Circle. But wait, there's a twist. Brummer later added an update saying one response suggested that Garlinghouse actually meant Ripple never offered 10 billion for Circle. Could Ripple have been interested at a different price point? Maybe. It's a fascinating puzzle. After all, Bloomberg doesn't just publish baseless rumors. When Bloomberg reports something like multiple sources say Ripple put in a bid, I tend to think it's likely true. Sure, it's not a guarantee, nothing ever is, but Bloomberg isn't some sketchy operation. So when Brad denied Ripple made an offer, maybe he was just denying a specific higher figure. That I can believe. But maybe Ripple should consider aiming high, really high, and you'll see why in a second. Let's talk about Circle. Here's the big news. Stablecoin issuer Circle absolutely crushed it in their NYSE debut, soaring 168% after pricing their IPO above expectations. It wasn't just a jump. It was a rocket launch. As of Friday's close, it hit $107.70. Remember when it was $31.00 pre-IPO? That's a massive leap, huge. So why isn't this game over yet? Here's the thing. I really hope it's far from over. Ripple needs to pull out all the stops, move heaven and earth if needed to secure this. Why? Because the long-term impact on their dominance in the market and the future of XRP is over decades. This could be a game changer. Now, if they don't, it's not the end of the world. They'll still be competing with RLUSD, and it's early enough for Ripple to take on USDC and Tether seriously. The race is far from finished. This could be a game changer. Instead of building their own stablecoin from scratch like Ripple is doing now, they could start from an already solid foundation. And let's face it, that's way smarter. Anyway, here's the big story. Why Circle's strong IPO doesn't rule out a potential Ripple deal. New analysis shows that even with Circle's impressive debut on the stock market, Ripple might still be eyeing an acquisition. Circle's June 5th IPO was a showstopper, with its stock skyrocketing 167% on its first day on the NYSE. But despite the buzz, whispers about Ripple considering a move haven't disappeared. Sure, Circle's IPO is a major milestone, but significant financial challenges remain for the company. Could this leave the door open for Ripple to step in? It's a question worth watching closely. A recent Presso research report reveals that Circle's distribution costs eat up a whopping 60% of its revenue, putting serious pressure on its profit margins, making Circle leans heavily on a stock-driven revenue model, making it more vulnerable to interest rate swings. This departure from the typical crypto exchange model could make Circle less appealing to investors, banking on the rise of stablecoins. But wait, there's more in Circle's S1 filing. Before you write off Circle's merger and acquisition potential, take a closer look. Synergies with Coinbase or Ripple are still on the table, but deals fell through largely due to pricing disagreements. With public markets setting clear evaluations, these talks might just spark back to life. Recent reports suggest megabanks are eyeing their own stablecoin projects, which could spark fresh bids from traditional finance. For those familiar with high-stakes mergers and acquisitions, Circle going public doesn't mean the game is over. Ripple could still swoop in with an offer, taking Circle private. Yes, that's absolutely on the table. Ripple should pull out all the stops to make it happen. Will they? Who knows? No one outside the inner circles has a clue what's brewing behind closed doors, but if it does go down, it would be huge. You know who understands the weight of this? Chamath Palihapitiya. Nailed the name? Maybe. Hopefully. Chamath is a big deal in crypto, and if you haven't heard of him, now you have. Chamath Palihapitiya, founder and CEO of Social Capital and former Facebook exec, is a prominent voice in the crypto world. He tracks it, he talks about it, and when he speaks, people listen. The guy's sharp, no doubt. Recently, he dropped a hot take that Ripple should make a big move, and it's worth paying attention to. Here's what he posted. Chamath suggests it would be genius for Ripple or Coinbase to buy Circle, with Circle's IPO reportedly 25x oversubscribed and the company valued at $7 billion. He argues that even paying $12 to $13 billion for it would be a steal. Why? Because the long-term potential of this business could be massive in 20 years. This is a big deal. Chamath's point is simple. Sometimes paying what feels like a high price now can lead to enormous gains in the future. And if a move like this lets Ripple dominate the stablecoin market, game over for competitors. Imagine the power play here. Ripple solidifying XRP's long-term viability, especially if USDC gets moved to the XRP ledger. Bottom line, this could be a no-brainer for Ripple. Huge risks, but potentially even bigger rewards. The crypto world loves bold moves, and this one could redefine the landscape. So here's the deal. Circle has basically built the entire market framework for stablecoins long before it officially exists in the US, essentially beating the genius Bill to the punch. Bold move, right? Now, here's my take. Stripe, Square, Ripple, Coinbase, they're all on a collision course, battling it out for stablecoin supremacy. That's fantastic news for businesses and consumers, but not so great for terminal margins. Why? Well, competition is the ultimate margin slayer. When you're first to market with a shiny new tech, you get those juicy fat profits for a while, but as rivals enter the game, prices drop and those chunky margins, they slim down fast. It's just how competition works. What Circle is hinting at here is this: as the battle heats up, margins will shrink, and in the end, customers are the real winners. When it comes to the business model, it might seem a bit less exciting for investors at first glance, but think about what it achieves for a company like Ripple. It's a masterstroke. The strategic positioning it creates is nothing short of brilliant. He goes on to say that the company capable of building the most efficient infrastructure and selling it at the lowest cost with just a thin margin on top is poised to dominate the market. And he's spot on. The key to winning lies in operating with slim margins, just enough to make it worthwhile. That's how the game is played. In free markets, this kind of competition is exactly what you'd expect. And honestly, it's what makes the whole system tick. Competition drives progress. And that's a good thing. Let me just say this: if Ripple manages to pull this off, it could be a game changer. Now, while there aren't any official reports confirming Coinbase is looking to acquire Circle, the rumor mill is buzzing with talk of acquisition discussions. So take it as you will. Here's the thing. Just because Circle went public doesn't mean the story ends here. Far from it. There's always a chance something big could be brewing behind closed doors. Or maybe not. Time will tell. One thing's for sure, though, something has definitely been happening behind the scenes. That much is clear. Oh, and by the way, I'm not a financial advisor. Don't make any financial decisions based on what I say or write. It'd be an epically bad idea. Trust me on that.